I'm Clint McLaughlin with Midwest Market Management. Got Rich Berg here today, Stu Hughes, and Riley Sykard. We're just going to have a little bit of discussion here about the report coming up next week. It's always a market moving event. It is also, in my opinion, one of the most inaccurate reports of the year, particularly in terms of the planning intentions. But nonetheless, the trade will trade it, and it will be our number moving forward until we get to June. Clearly, there's a lot of concern about the number of corn acres coming down the pipeline here today. So we're going to talk a little bit about that. Then we're going to hop in and talk about quarterly stocks, which has been a pretty friendly feel here lately. Old crop corn being a lot snugger than we originally thought it would be. So we'll talk about that a little bit. And then we're going to talk about some brief cash grain strategies and some things that producers might want to look at going into the report, or ways to prepare for, what the market wants to do after the report. So, Rich, why don't you go ahead and get started with our planted acre anticipations going into the report.
All right, we'll start off with the wheat. For all wheat. Average estimate is 46.475, and that compares to last year at 46.079, so relatively close. Spring wheat estimate is 10.531. Last year was 10.625. Durum was right at 2, and last year it was 2.064. For winter wheat, average estimate is 33.966, and last year it was 33.39. When it comes to the corn, average estimate is 94.361, and that compares to last year at 90.594, so roughly a 3.767 increase in corn acres. On the beans, average estimate is 83.762. Last year was 87.050. So if it comes in at the estimate, that would be roughly a 3.288 decrease in the bean acres. So when we look at this and wonder, is this possible? What's in the market now, you've been hearing for a long time, 3 to 4 million bushel increase in corn has been pretty common. And after discussions with customers and seed dealers, there's large portions of the country where farmers are struggling to pencil out soybeans based on their cost of production. So are these kind of numbers possible? Yes. Could they be even larger discrepancies? And the answer to that is probably yes too. And that's what you always have to worry about when you get into the government reports. But that's where we're. Go ahead.
Yeah, absolutely. And that's, so that's the point, is right now we've probably got this 93 to 94 million, 93, you said 93.4. Is that where you were saying the average is?
94.3 on the corn.
94.3, apologize. So where do you anticipate, Rich, that we run into a problem? I feel like that's pretty well built in. What do you think it's going to take to really be a knee-jerk reaction lower?
I think anything over 4 would drastically be a bad thing for corn. But there again, I mean, it's going to help beans and hurt corn, so you're going to get, it's probably not going to end up good for both.
Yeah, I kind of feel like the market, at the levels we're at. I mean, we got D's corns at 442 right now, so you've already taken nearly 30 cents off of it just from spring price. Spring crop insurance price was just set during the month of February. I mean, we didn't finish that not even 30 days ago, and we've already taken 30 cents off of here. So, I've been pretty bearishest corn market here for a while, but you got to get down to you're starting to get that feeling and that vibe where it's like, well, 94 million acres, 95 million acres, either way, it's still in the bag. So, there's a lot of growing season ahead of us, and we'll see where we shake out here. But I would agree, Rich. Anything, I'm kind of in that 95 camp. Now, I'm not saying that's where I think it is. I'm saying if we get 95 or higher, then I think we have a negative knee-jerk reaction lower. But you kind of get the feeling like this 90, 94 and a half area is kind of built in. What do you think, Riley?
Yeah, I'd say right now 94, pretty much the standard. I mean, you go ask any farmer or anybody that's in the marketing world, what's corn going to be? I'm hearing a lot of 94, 93 and a half. Talking with seed dealers myself, big companies are calling for minimum of 92 and a half up to 93. So I don't think anybody's expecting this number to be close to last year. So nine, to me, average guess at 94.3. Anything lower than that, I don't think the market's going to pay it much attention. But anything above 94.3, I could see this thing whipsawing down pretty quickly.
Yeah. Where's our soybean number at, Rich?
83.76, and it was 87 last year, so it's a pretty significant drop. But you got the large crop down in Brazil, so that's gonna offset some of our lost acres anyway. And as we talked about before, with the government lowering the carryout in the January report, we basically going to make everything a little more sensitive to U.S. weather now. Like you said before, the seat's still in the bag.
Do you want to give us some quarterly stocks thoughts?
Oh, can I play devil's advocate on the acres just real quick before we go there?
Please do. I can't wait to hear this.
All right, last year that bean corn ratio is not quite 2.5 to 1, about 2.47. Bean acres actually came in 500,000 higher than what the estimate was a year ago, and the bean or the corn number was actually 1.2 million lower. So today we have this bean corn ratio down to 2.23, basically 2.25 versus 2.5. Maybe the market's got this bean corn ratio pushed down because maybe the market doesn't believe farmers going to plant that much corn. I guess that's my devil's advocate thought is, why is bean profitability so crappy? Because maybe the market doesn't think the farmer's going to plant that much corn because profitability is not much better, if at all better, on corn. So I kind of look at that 94 million acre number as kind of the bare minimum. If we don't get that something close to 94, it could actually be kind of friendly. It's
what if it doesn't happen? What if it's not as big as we think, and you compile that with maybe a little bit lower old crop ending stocks, which has been the trend since, pretty much, November, December is, it seems like we just keep shrinking down the last year's crop and the carry-ins getting smaller and smaller. You could actually present the argument for a potential bullish surprise in this report from both angles.
Well, and that you bring up a good point about the weather, because there's a large part of the Midwest that is still relatively dry according to the drought monitor. So if you're concerned about a dry year, you're exactly right. You don't want to have as much money put out there.
Yeah. So, we'll see what Monday's numbers bring. I mean, right now, I guess for me, Rich and Stu, we're not doing anything aggressively in these cash markets in front of this report. Are you?
No, main thing I'm telling people is if they need something in the short term and want to move something, there's probably a chance it could be an erratic report, so I would do something prior to.
Yeah. All right. Now we feel safe to move on to quarterly stocks.
Sorry to go left to center there on you.
No, I'm glad you brought that up, and that's why we do this in a roundtable type of a format. Is we all have our own individual thoughts moving in, but we like to get together when we get closer to the report because this is a team effort, and we're trying to help guys make good decisions. So that's a very valid point and one worth bringing up.
All right, quarterly stocks. I'll try to stay off my soapbox on corn. We'll start with wheat. Wheat stocks as of March 1st are pegged at 1.21 billion. That's up from 1.09, 1.09 last year. We all know wheat exports have been pretty sad this year. Lots of wheat laying around. I do believe Chicago maybe matched its contract low this morning, and I think Kansas City was within 15-20 cents of its contract low. So that stocks number for wheat at 1.2 is probably fairly close. If I was going to guess, I don't think we'll waver much from that. And if we end up being above or below that number within 50 or 75 million bushels, probably isn't going to make much of a difference, just because the balance sheet has got a pretty good cushion in it for wheat. Bean ending stock or quarterly stocks, this would be as of March 1st. The average guess is 1.90. Last year was 1.84, so that's about 56 million higher than a year ago. Beans, kind of like wheat, you've got plenty of cushion. Ending stocks are guessed at 380 in the last month. At last month's S&D report. Bean basis, I don't know. I would just call it typical. Probably where it quote unquote should be. Margins are not that great for the crusher. Still positive, but they're not making $2.50 a gallon here. So bean stocks number, I don't have any problem with that number being a 1.9. I don't think we'll be a much above that or below it. You go back the last 10 years in history, it's a 50-50 deal on whether the stocks are higher or lower than that number. Beans are fairly straightforward. You export them or you crush them. The only problem with a bean balance sheet is they've got a thing called residual, which is USDA's little slop. So if the stocks number doesn't fit the demand that they have plugged in now, they can add or subtract from the quote unquote residual number. So I don't see anything in this stocks number, this March number for beans. Like I said, our ending stocks have enough cushion. I'm here today. The one that's going to have all the attention is the corn stocks number. World corn stocks, we all know, I believe, are the tightest since 2012, which is why our U.S. exports are up 24-25% versus a year ago. So this corn stocks number as of March 1st is, very important. Average trade guesstimates 8.15 billion. Last year was 1.35. So we're 200 million bushels fewer bullets to work with here on March 1st than we had a year ago. We were talking earlier about corn basis, eastern corn basis, 15 to 25, 30 over, get parts of Indiana and Ohio. Western corn basis, not quite that strong, but still historically pretty strong. And, in the middle of the country, I would call it, is, probably, more normal levels here. So that corn stocks number, if it's, even the hard part is to say is 8.15, going to affect the ending stocks number, because the way they calculate the stocks number is they take the stocks number from the previous quarter, subtract the ethanol that they know every week, subtract the ethanol shipments, or I'm sorry, the export shipments. We get those every week. We know exactly what those are. Take the stocks number that they're reported, and whatever that difference is what feed demand is. So feed demand can kind of be that slop area for USDA. They can rob from Peter to pay Paul by adjusting that feed demand number. Rarely do you see them change the feed demand number until it's after a stocks report. So the stocks number we get on Monday really won't feel the effect of it until we get to that April S&D and see what they do. We know their ethanol number's pretty close. The export number, they're dragging their feet. USDA's got 8% more exports plugged in for this year, and today it's running about 24% ahead of time. So either they're anticipating that exports are going to go to pretty much zero for the rest of the year, there's going to be cancellations, or just going to kick the can down the road. But eventually, when you get that September number, that's kind of the end of the road, and you can't kick the can down the road anymore. So my feeling on that stocks number at 8.15 is probably close. I wouldn't be surprised if it actually ends up being a little less than that.
So we wrap all this up together and, get down to the meat and bones of the deal and what should guys be doing. And clearly grain marketing's not a blanket type of a situation, and everybody's farming operation's different. Everybody has different long-term, short-term goals, all of that. In my perspective right now, we're kind of, for us here anyways, we're for the most part in a holding pattern particularly on new crop, waiting for a better day. With what I know here today, what am I looking for on corn? We put in a spring price of 470. Typically every year we rally for some reason at some point in time. We can't clearly predict what national yield's going to be, which ultimately will be the driving force behind where these prices go between now, spring, summer, and into harvest. But I know if we rally 4%, which statistically happens always, that puts you a 4% rally from spring price puts you to 490. An 8% rally puts you to 510, and a 12% rally would put you to 530 December corn futures. So all of those, I do believe, historically are within the realm of possibilities from a rally stance from spring crop. Now, we got to get back the 30 cents that we lost just to get there. But that may or may not happen, as a result of the report. But that's kind of where I would be searching for areas to get interested in corn, new corn crop sales. Beans, we got a ways to go before I'm really showing any interest. I do know we had a lot of guys hedging some corn prior to this big sell-off. This might be an opportunity if you've got some corn sold, or if you dumped a lot of old crop corn on that last rally. Might be a good place now that we've set back to maybe consider some re-ownership strategies out there. So that would probably be the biggest thing I would be considering doing in front of the report. but that's kind of where we're at. So anybody else have any final inputs here?
Yeah, I'm kind of in that same camp. My crowd is that it'd be interesting to know nationwide what percent ownership farmer has left here. You know, my crowd's down to the last 10-15%. So we're not behind by any means. I think we're current enough, and we can maybe be a little picky and choosy here. But I have no. I don't think a guy wants to wait until the first week in August and get rid of the rest of his old crop corn. I think we got a South American safrinha crop that's largely exported that's going to start, hitting the pipeline here probably in July. So from a flat price or basis perspective, my thoughts are have everything pretty much cleaned up by the time we get to the first or middle part of June.
Sounds good, guys. Well, we've been had a good report, pre-report meeting. If you got any further questions, you can always give us a call. Pull us up on our website, Facebook. We're pretty easy to find. Midwest Market Management. We're out of Eldora, Iowa. Thanks a lot and have a great day.